Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have John Ramsay on the line. He's the Chief Market Policy Officer for the IEX Exchange. John, how you doing this morning?
I'm doing great.
Thanks for joining us. Now, used to had a little stint there at the SEC. Tell us briefly about your time at the SEC and why you made the move to the IEX.
Sure. Well, I had a lot of different jobs in the course of my career, some in the private sector, but I wound up back at the SEC after Dodd-Frank was passed in 2010 and ended up heading the trading and markets division there. And I did that until end of March of 2014. Interestingly, about the time that I left was the time that Flash Boys came out. So, like a lot of people, I rushed to get a copy of the book. I was fascinated by the book, but more than just the substance in the book fascinated me. And so the odd thing is that while I was reading about them, the guys here were reading about the fact that I was leaving the SEC, contacted me, and I decided that this would be probably the most interesting thing that I could think of doing to actually work for constructive change in the markets, not as a regulator, but kind of from within the private sector. So that's something that really was a unique opportunity, and that's how I wound up here.
John, can you give us like an overview of the IEX? Because a lot of our listeners have read Flash Boys, but a lot of of our listeners still don't totally understand how it works. Can you give us like a general overview of how IEX works?
Sure. So we are currently an alternative trading system, meaning that we trade stocks for our subscribers, generally large institutional investors, those who choose to subscribe to us, launched several years ago. We're different from most other trading platforms. For one thing, there's fewer conflicts of interest between the people that own our platform and the people who trade on it. So the only people who trade on our platform are securities firms, broker-dealers, but none of those people have an ownership interest. We have a much simpler pricing system, much simpler set of order types. And then, there's the much talked about sort of speed bump, which is basically, to boil it down, it's a length of coiled fiber that amounts to 350 microseconds. That's millionths of a second of added delay for people who connect to our platform. And the reason that we do that is to make sure that everybody who subscribes to us and connects to our platform does so at the same point in time, so that no one party gets an advantage by virtue of being closer to the market than somebody else and getting a trading advantage based on that sort of speed edge. That is unique. No other market is doing that. We want to take all of those principles and advantages in the exchange world. We're applying to be a fully registered national securities exchange like New York Stock Exchange and NASDAQ. So that's kind of what we're about.
Currently. And you have filed that application. Why do you guys, first of all, why do you want to become an exchange and move away from the ATS?
Well, we've had extraordinary success as an ATS. We're now, by most measures, the second largest out of 40 some odd platforms, and have had very large growth. But under the regulations, there are limits as to how big you can grow without being an exchange. So essentially, at some point, if you get big enough, the regulations just don't make it practical anymore to continue to grow without being an exchange. And part of it, too, frankly, is that part of what we're trying to do is really push for change throughout the market in terms of how investors are treated and how market intermediaries like exchanges treat investors. As an exchange, we can have a lot more influence in pushing market policy in a positive direction than we can as an ATS. So those are both reasons why we're in a much better position as an exchange.
Now, you filed an amendment to your exchange application yesterday. Tell us about that amendment, and there was also some redesign of your IEX router. What was that all about?
Yeah, so the router, basically the router just refers to the mechanisms that we have for routing shares away to other markets when we're not able to trade everything on our own market when somebody sends us an order. And the issues tend to be fairly technical and complex, but there were some people who commented as part of our application process that they thought that our router had an unfair advantage over third-party broker routers that might be competing with it just based on the design. Essentially, the argument was that we were that other broker routers would have to go through this 350-second speed bump in order to trade, whereas our own router would not. There are various other kind of complexities, but suffice it to say, we changed our router design to, we think, completely eliminate any argument that we were giving our own router an unfair advantage. But at the same time, and this is the most important point, making sure that we protected our ability to protect investors, which is to say, we designed our market so that participants who are just looking to catch signals from IEX, looking to find out what trades happen on IEX, and then race ahead to other markets and cancel quotes elsewhere, a term that sometimes people call latency arbitrage or quote freight or electronic front running, whatever you want to call it. We created a design that prevents that from happening, and we have held true to that principle. So we hope that this change will streamline our approval, and that we'll be able to get it done by March 21st, which is the current deadline for the SEC to act on it.
Just with regards to the speed bump, I've read a few other people, and they're concerned that other exchanges might follow with speed bumps of their own if yours gets approved. What are your thoughts on that?
Yeah. Well, we're not trying to claim an exclusive franchise to speed bumps. I mean, I guess the point I guess I would make is that all exchanges use different kind of mechanisms to control the speed of access that people, how quickly people can get to their markets. They've done that for a long time. Most exchanges make it sort of slower for some people to get access than others, and we're the first people that have really tried to create a level playing field by making sure that everybody is connected, with the same latency or the same time difference. There's nothing radical about that. We just think that our design is something that actually creates a fair market. Now, if other exchanges want to come forward with their own proposals, then the SEC can obviously look at those on their own merits. We don't expect everybody, or frankly want everybody else to copy our precise model, and we don't want the SEC to say this is the thing that everybody should do now. We're not trying to tell everybody that they should gravitate to our way of doing things. But we do think there's plenty of room in the market for innovation to grow and to happen. That's kind of how free markets evolve. And our thought is that if market participants have the ability to choose the alternative that we're offering as an exchange, they decide that they like it and they send business there as a result, then that's kind of the way that markets evolve. That's, participants ought to be able to make those kinds of choices. We don't need to rely on the regulators to fix everything on their own.
John, before we let you go, the markets are very complex. What do you say to critics who say that the speed bump just adds unnecessary complexity, of the market structure? And also give us an update on the volume and how you guys are doing over there.
Sure. So again, on the complexity point, I would just say the market, no question, the markets are extremely complex. The speed bump our little 350 microsecond speed bump doesn't do a thing to make it more complex. In fact, we think it actually will help in some respects. As I said, there's all kinds of differences in terms of speed of access that different exchanges offer, and ways that they manipulate speed in terms of how people connect to their platform. They just never have been very transparent about it before. So the speed bump that we're offering is completely transparent, above board. It operates exactly the same way in for every order that comes in. So that actually is a simpler template, simpler idea, we think, than kind of multiple different tiers of access with differences in speed that nobody has sort of a clear view into. And in terms of our volume, we're approaching 2% of total all trading in the market, which, as I said, as an alternative trading system, has been an extraordinarily successful record. Where, as I said, we're number 2 out of 40 some odd, continuing to get shares and market volume every day. And we hope that as an exchange we'll be able to grow that further. But as I said, we don't have our fate completely in our hands. We have to rely on the SEC to rule on the application, and we're hopeful that they will do that by March 21st.
Just have an online investor in our chat just asking one quick question here before we let you go. Rob Hood just wanted to know, do you have some online brokers using your platform, and which ones are hooked up to you guys?
We have, I would have to get back to you on a specific online. In general, though, I would say retail firms have not largely connected to our platform. Okay. And frankly, but the reason for that is that the alternative trading system kind of model just isn't well designed for retail firms to be able to do a lot of trading. Certainly, as an exchange, we expect a lot of those firms. I mean, essentially, everybody will need to be connected at that point. We certainly look forward to the ability to serve a lot more retail investors than we've been able to this point.
We've been on the line with John Ramsay. He's the Chief Market Policy Officer for the IEX Exchange, joining us here on Benzinga's Pre-Market Prep. John, great information. Good luck. We hope to speak to you again soon.
I really appreciate it. Fun to talk to you guys. Thanks a lot.
Thanks a lot, John.